Hey guys, I know we've talked about this a million times, but I swear I think it's going to be different this time. Interest rates have gone down dramatically in the last 5 days, and we have gotten a not so favorable jobs report. We have got a not so favorable manufacturing report. And if employment comes back on Friday, which is what, about 2 days from when I'm videotaping this, and the CPI report on the 12th comes back we could really and truly see the first Fed rate cut, and I think in August. I think that we probably would have to have a bad July as well, but everything is trending that way. And somebody gave me a breakdown of how rates work or how it should be set up this morning, which was kind of an interesting analogy. They said when you're coming back from outer space in a spaceship and you're coming down, you don't just go straight down and land. They deploy parachutes and they set up what's called a soft landing, which you might have heard if you're watching the financial news right now. They talk about doing a soft landing versus a recession. So they deploy the parachutes well before it reaches the Earth's atmosphere so that it can slowly go down and the astronauts will be okay. So where did that weird analogy take us? It's kind of the same thing with interest rates. If they wait until everything is perfect and then start cutting rates, we could come down too quickly and actually mess up the economy and go into a recession. Where if we start doing the cuts now, we can set up what's called a soft landing and make it so that by the time we catch up to inflation, that the economy is still flowing and moving forward and they didn't do too much to stifle it. So the Fed's going to check the numbers here in June, they're going to check the numbers in July, and I think that if we get the same things that are happening here in June, I think the beginning of the rate cuts is finally going to start. We'll see if I'm right. Jason from Prosperity Lending.